What if I told you that slavery never really ended? It just lost its chains, its auctions, and its visible prison walls. And the most unsettling part is that many people trapped inside it believe they're free. That's the mystery we're unpacking today. Because debt slavery doesn't look like history books promised, it looks like normal life. Credit cards, student loans, mortgages, and monthly payments that quietly dictate your choices long before you realize what's happening. To understand how the system formed, we have to rewind to a time when debt was openly acknowledged as a form of bondage. In ancient Mesopotamia, debtors could be enslaved for unpaid loans. In Rome, indebted citizens lost their freedom. And even in medieval Europe, serfdom functioned as a debt arrangement tied to land and obligation. But the real transformation began with modern banking, especially in the 17th and 18th centuries, when central banks, fractional reserve lending, and interest-based credit systems emerged, promising economic growth while quietly normalizing permanent indebtedness. The cause and effect chain is crucial here. Governments borrowed to fund wars, banks learned they could create money through loans, and societies accepted interest as inevitable, setting the stage for debt to become not a temporary emergency, but a lifelong condition. As industrialization rose, wages failed to keep pace with productivity, forcing workers to borrow to maintain living standards. And this is where the system accelerated, credit expanded. Consumer loans exploded, and financial institutions realized that a population living paycheck to paycheck was more profitable than one that owned its future outright. The breaking point came repeatedly but predictably. The Great Depression showed how debt-fueled growth collapses. The 1970s marked wage stagnation masked by credit expansion, and the 2008 financial crisis revealed that debt wasn't just a personal burden, but a systemic weapon capable of crashing entire economies. Yet instead of dismantling the system, policymakers doubled down, bailing out banks, lowering interest rates, and encouraging even more borrowing. The fallout was subtle but devastating. Home ownership tied people to decades of payments. Student loans became non-dischargeable traps. Healthcare debt exploded. And entire generations entered adulthood already behind, not because they failed, but because the system required it. Attempts to fix this: financial literacy campaigns, minimum wage adjustments, debt restructuring programs largely failed because they treated symptoms, not causes. Teaching people to budget doesn't solve a system where survival requires borrowing. Raising wages slightly doesn't undo compounding interest that quietly outpaces income growth. Now here's the unsettling modern parallel. Globally, household debt has surpassed $60 trillion. Student loan debt alone exceeds $1.7 trillion in the US. And most people cannot survive 3 months without income, meaning freedom is conditional, temporary, and revocable. The pattern repeats because the incentives haven't changed. Banks profit from debt. Governments rely on it, and consumers are trained to see it as normal. This is why debt slavery works without chains. There are no guards, only deadlines. No cells, only contracts. No whips, only credit scores. And the illusion of choice keeps the system stable because people blame themselves instead of the structure. So what are the takeaways? First, debt is not just a financial tool, it's a control mechanism that shapes behavior, risk tolerance, and life decisions long before default ever occurs. Second, systems that rely on perpetual debt require perpetual dependence, meaning true financial freedom cannot exist without structural change, not just personal discipline. Third, history shows that when debt grows faster than real economic value, collapse or reform is inevitable. The only question is who pays the price. The warning is simple but uncomfortable. A society built on invisible bondage cannot remain stable forever. And ignoring the pattern doesn't break it, it strengthens it. The open-ended question is whether we'll recognize debt slavery while it's still normalized, or only after it tightens further. If this changed how you see money, freedom, or the word choice, consider liking the video, subscribing for deeper breakdowns of hidden systems shaping our lives, and sharing this with someone who still believes slavery is only something that exists in history books.